of UnderArmour for you. Ticker symbol UA. We'll look at the 3-year weekly chart. I'm on Thinkorswim, the mobile version. And UnderArmour is in a bearish trend, especially recently, coming probably from the start of the year, January 20th, with the high of 24.55. Actually, that was July 22nd, but there was, let's see. There we go. When the contagion kind of started with the coronavirus, and we're coming off of those from really in a trading range, an extended trading range. And I think it's going to be an uphill battle right now because there is a lot of overhead supply above 14. If we look above 14, a lot of that buying and selling occurred right up there, just a lot. And so there are a lot of owners of the stock at these higher levels, and they won't want to sell off at the lower levels yet. So what I'm saying is the price is just going to stay down. There's going to be an impasse. Maybe there'll be accumulation, but right now the only positive vision I see right now is there's a gap in price right here at 11. Let me put something on the screen. We'll do a rectangle and spread it out a little bit. Right there. And that's the gap in price that I saw. And there's an old, just the adage in trading and investing, all gaps must be filled. But okay, here we go. There's a gap also up here. It closed on this date, October 28th. It closed, UnderArmour closed at $18.91. Next morning, that was a Friday. Next morning, next opening trading day, it opened at 16:01. So it went from, wait a second, let me get that. Come on now. There we go. Went from 1827 to that 16:01 handle. And there was no price action during that period. So UnderArmour at that point in time had found a little bit of support, a little bit of a base, because a previous price level, the low was 1505 and that 1533, and that little range right there was 1505. 1505, low on this date, December 24th, 2019, 1505. And then we had the low on that date of November 18th, 1505. So the point I'm making with that is price has a memory. It found support there and bounced off of support and closed the gap that was initially made on the 10/28, October 28th. Anyway, so saying that to say, right now we're at historical lows for UnderArmour. Let me see how far back we go. A 10-year weekly chart, and see if this historically, the lowest has been all-time lows, $6.80. So in theory, you're thinking everyone, like, hey man, it can only go up. Well, actually it can go down. And I would wait a little bit on entering UnderArmour unless you're buying it for just an extremely long-term play, a 3-5 year window. Because on the daily, there's a little bit of a base trying to form right here. In the last couple of days, let's see, March 18th and the 19th, we had the high of 729. And then the 20th, 801 was open, and the high was 842. Let me see the volume. And a lot of volume, but it was selling pressure on 11 million. I would wait on Under Armour unless you're looking at the dividend, which some of these companies, their dividends are going to be cut, paused, or lowered. So what I would look for would be hopefully a base that was built. I'm going to show you one stock that, just for an example, like Activision, the gaming company, ATVI. And I'm going to wrap this up because I want to be able to send this to you. But Activision built, wow, we'll go to 3-year real quick. It's right there. It's sold off. Here we go. Come on now. Okay. Activision started selling off October 1st, 2019. Sold off. And you think in your mind, like, how low will it need to go? Up there, you're thinking it can't go any lower. It's going lower. It passes all these price levels. And let's say I'm going to buy here. Oh, no, it's going up. It had a green day. Let's buy here. And it continues down. The idea is you want to let that find its own bottom. It'll build a base, and the base will look like that kind of that not cup and handle, but almost like a little bit of a bowl. And the wider the base, that sharp base is not really good. It's a tough one. But the longer it stays down there, that it's accumulation happening right now. It's consolidating, but people are picking up shares. There's smart money's buying an Activision. And then they had the base breakout right here on the 28th. Because you had a couple of times it tested the breakout, but it really broke out on the 28th. Failed a little bit, but it's finding that trend out of that basin. And it was just starting its run when the sell-off occurred right now. But you saw how far Under Armour went down. But Activision, they're coming out with new platforms, and a lot of people are playing games online. It's getting bigger, and right now everybody's home. So you saw the sell-off. The sell-off would have normally taken this down below all levels, but it did not fall below where the base breakout occurred. So if it stays above 50, Activision is a buy. It's just something I'm kind of looking at, Doc. All right, I'll let you go.